The breakup in 10-year Treasuries, the yield, the move higher, really subtle. Just a couple of basis points, Chris. How important is this move for you?
Well, John, Tom, and Lisa, as a former baseball player, I can actually tell you stealing second is very different than stealing third. And stealing third is what we're trying to all do right now as it relates to all the volatility that's about to come in the markets. If you really think about what you all started the program with, substance is absolutely key. It usually is, but even more at this point. Now, the breakout in yields is telling us two things. Copper hitting a new high yesterday. That's number one. Housing is powering ahead. That's number two. And it's early in the cycle for housing, particularly in the States. And then number three, Lisa mentioned this before, is the correction in the dollar versus a very strong weakness in the dollar or strengthening. It's just a correction from the overly strong dollar that we saw in the past few years. And last but not least, this is telling us with a megaphone that a cyclical move overall in the markets is afoot. We had a few of those head fakes during the year, but for sure, from our perspective, over the next 12 months, it's the cyclicals that are getting up off the ground and looking to power this market ahead.
Okay, so you are seeing rotation, and is it a rotation on an absolute basis, tech weaker, others better, or is it a rotation that's a relative basis where tech still performs?
Because there's still a lot of nervousness in the market, and we still have a lot of things that are very unclear, particularly, number one, the potential third wave with the virus. It seems to be that tech and healthcare and some of the areas that powered through the pandemic will be a source of funds. They won't be the only source of funds, but as investors still stay nervous, they can't take all of their cash that has been built up, and we still estimate that there's over $4 trillion in cash on the sidelines, and put it to work. So they're going to move some money in to buy those areas that did not perform, and then use some of the profits, particularly if there's worries over capital gains taxes going up next year, just before the end of this year. So they do the dual method, Tom, where they use a little bit of their gains from the areas that performed well, use some cash, but it's not a huge move into the market. It's more of a back and fill seesaw type of environment.